Billionaire investor Jim Mellon is sounding the alarm on United States stocks, calling them heavily overpriced. Mellon points out that while the United States makes up just 3% of the global population, it holds over 60% of the world's market value. Instead of betting on big tech, he suggests looking at the energy sector, which is seeing massive demand from artificial intelligence data centers. He also recommends holding the Japanese yen and exploring emerging markets. Meanwhile, Mellon views Warren Buffett's massive $350 billion cash reserve as a major warning sign for the current global economy.
Global markets are closely watching as China calls for thorough preparations ahead of a potential meeting between President Donald Trump and Chinese President Xi Jinping. The high-stakes diplomatic visit, tentatively scheduled for late March of 2026, comes amid rising tensions over trade tariffs and the ongoing conflict in the Middle East. United States Treasury officials are expected to meet with their Chinese counterparts in Paris this week to discuss potential business deals. China's top diplomat recently warned against erecting tariff barriers and pushing for economic decoupling, stating that such moves would only damage the global economy. Both nations currently have a fragile truce, keeping tariffs below 50%.
A major shift is unfolding in North American trade as Canadians launch an economic boycott of United States goods and services. Triggered by recent tariffs and political friction, consumers are intentionally choosing domestic brands over American imports. This grassroots movement has pushed the share of United States imports to record lows, prompting the Bank of Canada to monitor the structural shift in the national economy. The impact is being felt across multiple sectors, with cross-border travel dropping sharply and real estate investments slowing down. Experts warn this changing dynamic between the two massive trading partners could permanently reshape economic growth on both sides of the border.